So it's Monday, the 4th of August, 2025. And this is my update. Now, we're in a very interesting moment because we've just been through the biggest market recovery in history. Well, at least for the US. And if you look at the UK, it's the same story. So when Trump came out and announced his Independence Day tariffs and the market collapsed, the collapse was stopped. I mean, he almost said, oh, you can buy now. And it would not be beyond the realms of belief to imagine that he knew there was something coming, because immediately thereafter the market started to rise like, as they say, a homesick angel. Up it went, up it went, up it went, and it rallied in a way where there's really nothing in the past that matches it. I personally believe it was market support by the American government, probably the Treasury, because obviously Trump is not in Jay Powell's best books, you would think. Anyway, so Treasury came in, pumped in liquidity, and up goes the market. Well, we're back now at the level from which it crashed. So that support is likely to be over. And now we're back to some sort of normality, if we can call this normality. Now, as soon as we reached that sort of levels last week, down came various themes. And basically, the carry trades that were pushing the UK market went into reverse. Now, to me, that says that there was a lot of hedges that were reversed at the beginning of this recovery. So people that were long and short closed their shorts. Maybe they're just short, but anyway, they were closed and everybody went long. Now, the shorts are coming back in. So the market is going back to the old model of hedging. And what they do is they pick, say, a phone company and go, that's a good phone company, or that's the best phone company. And then they look for the worst phone company and they short that. So it doesn't matter whether all telcos go down, because the weak one will fall more and the good one won't fall so much. So they'll make money either way. So they'll make more money on the short and they'll lose less money in the long. So if the market goes up for mobile phones, then they'll make more money on the long and they'll lose less money on the short. So it doesn't matter which way the market goes in general or the sector goes in general, they make money. That's the basis of hedging. So that means that these days, pretty much everything at an institutional level is some kind of hedge. Now, anyway, if you know the market's going to go up because you've been told, for example, you close your shorts, don't you? So all those hedges disappear. But when the action is over, you put the hedges back on. And that's what we saw last week. And that was very, very, very big move on anybody that had contrarian stocks, because they're the ones that the institution short. So anyway, here we are, new month. And I think we're back to some kind of normality. Now, if you look at various assets, if you look at Bitcoin, it's in a bit of a sideways. Actually, it's pulled back. So because Bitcoin would react to liquidity being injected, the liquidity no longer being injected is a bear factor for Bitcoin. Now, if you look at gold, you can see that it's in a very much sideways trading pattern. It's had a big rise and now it's going sideways. So gold is looking for direction in the future. Now, that could be up or down. And if it isn't, it will be sideways, as you imagine. Now, that's an old market joke. But in reality, when you get these channels that are tight like this, a breakout in either direction will be a significant move. So if we are to break out of this channel, it will then travel quite a long way in that direction. It will be a big move. So actually, it makes sense just to sit there, watch it, and when it breaks out, and when you're comfortable, it's broken out of that channel, you just jump on board and go for the ride. So that's gold. And a little bit, you can see that Bitcoin is trying to sideways trade, but being a highly volatile asset, it can't manage it. But nonetheless, it's pulled back, and that is quite bearish, I think, for Bitcoin. But the market has hit the level it was before Trump threw the grenade in the bunker. So what happens next is also important, because it defines really the long-term trend. Are we going to carry on going up? Are we going to carry on being in this tech bubble? I mean, it's a boom. Is it a bubble? Probably it's a bubble. Bubbles can go a lot more. So that's the call that we will be making shortly. But now, over the next couple of 3 weeks, the trend post-Trump tariff crash will be established. So all eyes on that. Now, the other thing to bear in mind is Trump. And Trump is the market these days. What he says, what he does, dictates, defines where the market's going to go. So the key game now is to guess what he's going to do next. I mean, that might be a mug's game. But if you can work out in your mind what he's going to do next, what's he going to do? Is he going to, do something horrible to Greenland? Is he going to decide that some country we haven't even thought about is really bad and that America needs to, teach them a lesson? Is he going to pull out of NATO? Is he going to dump the World Trade Organization? Is he going to invade Canada? All those crazy things. All those crazy things that can never happen, but we now know all things are possible. Now, if we can call that, or even get close to calling that, there's a lot of money to be made in that trade. So think about that. I'll be thinking about that. And as soon as I have any ideas, don't worry, you'll be the first to hear. Thank you very much for watching. Please subscribe and like, ring the bell, make a comment, etc., etc., etc. And there'll be more of this along. Every time I get an idea or an insight, or I write something that's interesting that you need to know about, I'll be posting it here. So if you're subscribed, you'll find out when I put the next thing up.